Welcome back guys, Harry here, known as Tradesharpe, and in today's video we're going to do something a little bit different. What we're going to do is be reviewing people's trades in the public group and going to give my opinion about the trades. Now they don't know I'm making this video, no one knows I'm making this video. People think, oh, he doesn't look at the trades in the free group. I do. I'm going to go over them and just give a few pointers, something I like, something maybe I don't like, and have a look at their trades. So I think this is going to be a great video, packed of information here. Always good to look over trades, see what other people are doing, and look at it instead of me telling you what to do. It will be saying, okay, this is what I would do. So it's something a little bit different. I think you guys will enjoy this video. And you know guys, do the YouTube business, part of the game. If you can leave a like on this video, get this video past 500 likes would be amazing. And yeah, with that being said, let's get into the video here and let's go review some of these trades. Also, all my official links are in the description below, nothing else, so you can check that out. You can join that free group where I'm gonna review the trades. And yeah, drop me a follow on Instagram, you know the drill, and let's get onto the charts and have a look at this. Alright, so we jumped here on the free Discord and we're gonna go look through these guys' trades and see what they've been doing. So first one here, it's beginning of the week here. I'm gonna look at this trade. Now this trade I do agree with, and this is actually the same trade that I've taken here. So simply selling break down below, not the first candle. The first candle is too early. So if I look at this person right here, they sold on the first candle. Reason why first candle's too early: first, we've never broken lows, and we're still sitting at a support zone that this guy had marked here, which is absolutely correct. So we want something closing below that zone. So the second candle here is going to be the one. Nice top wick, break the low, and you're off to the races here. And I remember this day we looked for continuation here. There was no continuation. Looking for sells at the break of this low here, pulled back instead, had to get a re-entry back up at the highs here. And I do think that I posted this trade in here. Yeah, this is the same trade. I was attempting to leave runners but closed majority down here, and you can see same entry with that same line. So nice to see that. And yeah, nothing wrong with this trade, totally agree with it, and pretty smooth trade. So let's scroll down here and see. Yeah, other people quoted, very happy to see that. All right, so let's have a look at this long. So this long here, taking it reaction based, so impulsive entry, not wanting to miss the move. You can see that basically took it halfway through the candle at support, basically retesting into this zone. I do agree with this, and this is a classic setup here, but the problem is that this candle can end up filling the wick, and you don't have to run such a big stop loss here. You could pull your stop loss all the way to this low here, right? And you can end up having a better move once this candle closes bullish, because I'm a person who likes to trade based off confirmation. And if you're not trading based off confirmation, where you're just trading based off reaction, you have to have that variable of, will the candle end up creating a support or will it not? But if you look here, when candles do create the support, that is where we get the move. Support created, move, support created, move, support created, move. So I like that we broke out the zone. We created a target. This is what we call a setup 2. Exactly the same cells I showed you. This is the opposite way around for buys here on gold. We create the support. This candle makes deep bottom wick. Your stop loss goes below the lowest low here, and then you enter break of the high. Yes, you miss out on a couple of pips here, but you're gonna get a lot more confirmation here. So that's a slight edit I would make personally myself here. And yeah, let's keep scrolling down and see what we got here. All right, here's a losing trade. First of all, what time frame is this? This is a 15-minute time frame on GJ. Yeah, this is just nuts in terms of stop loss here and target. The entry here was sold straight at support. You're selling into your line here. So why would you draw a support and then sell into it, right? And then put stop loss somewhere into the moon here, right? You always want to, now this is fine, you always want to keep something more, tighter stop loss. You want to have a better idea, and you never want to sell into support, because that's where price is likely to bounce, right? So if we look what you said here, can tell me what I did wrong. My confluence was session bias was bearish, price broke below previous support. Yeah, broke below previous, but it's still at a support. You can't just say since it broke previous and bias is bearish and your EMA, right, and your wedge and all of this. See, so this is the number one mistake I see, and this is what's going to help you in this video, guys, is a lot of people think that more confluences equal a better trade, when in reality, the more confluences there are, the more variables there are to go wrong, because a wedge has a probability and statistics of playing out and not playing out. A close below support has probabilities of not playing out. Price below an EMA has probabilities of not playing out. So especially selling into this type of zone here with a stop loss in the moon, you're going to be wrong anything closing back inside the range here. And if you see it reject your support here, just get out when it comes back to the range. So that's the problem with these trades here. Let's scroll down and see what we got. A lot of videos go with real money. I was wrong yesterday on GJ. I just think you need to learn a bit more about management here. First of all, the entry should have been, I don't really see an entry here. Nothing confirmed a support creation here. These were weak candles here. You know, you're trying to target this zone here. You did luckily get into a profitable position, but I don't really see any management being done. Once this support is created above your entry, your stop should be moved to break even. I'd recommend you watch. So I don't agree with this entry. I don't understand. Buying at support, selling at resistance is not a good strategy. You need to buy at support if you see a support formed, right? Not just buy and hope for it to play out, right? So this is not a good approach here. You need to have more clarity and, you know, do it step by step here. So go ahead and find some more trades here. Okay, he's claiming this is a setup 2, right? So he's saying setup 2 here. So setup 2 is part of our setups here. This is not a valid setup 2. Reason why it's not valid, we need a strong closure at support. Yes, I understand. You know, you're looking, this looks good. We have clean candles here. You have a zone to trade in, but you need a strong closure at support. Just having these weak candles here is not going to do much, and you need to make sure that you're having a strong closure at support, like the example we saw on gold earlier on. So that's how I would improve that. It did end up working out, but that was your entry candle. Same thing. A lot of people jumping the gun here, right? And long term, it's gonna, the thing is, you're getting away with it because the idea makes sense, which is great. But the problem is, long term, you run this over 100 trades without the confirmation of this candle close. If this wicks down, stops you out, then goes, you're going to be really pissed. And even with this confirmation of this candle, you still get that sometimes. So the probabilities of that happening without the confirmation are slightly more. We're talking about 10-15%, but it makes a lot more sense to wait for that candle close. Yes, you're going to miss out on a little bit of pips, but you're going to have a lot more confirmation that will take you up to the next zone here. And this is going to give you confidence that if anything is breaking this support, you can even get out of your trade early, right? So that's very, very, very interesting here. This trade, we took this trade as well, but he closed at take profit here. This was 6 pips for me in terms of profit. Wasn't enough. I ended up going break even here. So I agree with that trade. We were looking at the same. This gold as well, look, buying at resistance is never a good idea, but I do know on higher time frames that this trade had a 1 hour close above. So I do agree with that since there was a 1 hour close. But yeah, especially after this candle gave you the liquidity grab, not a bad idea. It's fine. If it didn't have the liquidity grab, you would have to run bigger stops. This was a gold trade we took on Zoom. This was an absolute banger. 5-minute entry, a little bit more complex. Maybe I'll make a video about that in the future, about those 5-minute entries. I want to jump into the exclusive Discord now, and they're not going to be happy, but let me go and let's have a look at their trades here. Let's take NY session here and have a look at a few of those trades. So here's a trade they took on Friday here. I remember them talking about this. This is a setup 1 closing above the range here. Some of them took it on break of high. Some of them took it on flip. Some of them took it on 5, right? But all the same idea. They were talking about it in voice chat. We were talking about in the plan here, how buys above here if we got down and we close above here, right? So if we close above here, buys make sense. So it follows the plan that I sent out there. So that is already a win. The only thing is breaking the high, right? Like he said, maybe close your break of the high if you entered before. That is what I'm going to agree with. Reason being is if we respect the high like this, see how highs are respected? If highs are respected like this, high is respected, we normally can get pullbacks. And that's what could happen. If this high was respected, price could just pop up and then come back down first and then continue up bullish. So I prefer entering at break of high. That's the only adaptation I'd make to that. And yeah, that's pretty much good. Go ahead and look at a few London session trades here. All right, here's a classic trade here, a setup number 3. Totally agree with this on EU. Closed below the zone 4-hour resistance, pulled back, ended up giving you a setup 3, candle made a top wick, broke the low, and that's that. So very, very simple setup 3. If you guys don't know what a setup 3 is, check out the setup videos, but this I totally agree with. Markup looks good, bias was bearish, classic trade here. Let's keep going on and see what we got. All right, here we have a little bit, someone in the group who trades slightly different here. Now, the idea behind this is totally fine because, you know, we got the break of structure. I expect him on this trade, and I know I spoke to him, is this candle breaking structure is the trigger candle. So any pullbacks after this candle breaking structure, he's looking to sell on that. Safe stop loss, looking to target these lows and get towards the low. And this follows a plan. It makes logical sense. I think he used also fib retracement to help in this entry, and I don't disregard any other style of trading because it's all price action. I can see the same thing here. Price close below structure. Does it follow my rules? Not exactly, because I would be looking more not to be selling in a rejection zone, but obviously it's working for other people, and that's the number one thing. So all right, we'll have a look as well on people who trade indices here. Anyone take this trade here? I agree with, but again, breaking the lows, it's going to give you a lot more confirmation. When price doesn't break lows, sometimes you get reversals, right? Maybe we can see an example of that on the charts here. When price doesn't break lows, you sometimes get reversals. So let's go and find where price was going down, right? So when price is going down and it respects the lows, you will see how we get reversals here, right? So right, something like this. It closed below the support here. This is an example. Closed below the support, clean candles to the left, never broke the low. You got to pull back first. You don't know. Look, if you put your stop, if you entered on the flip like this, and you know where your stop is going to go. Stop is going to go above the highs. Maybe spread takes you out there, right? Spread could take you out, and your target was here. That spread taking you out. But when you enter break of lows, you don't expect it. You expect it to respect that, and you get the much more efficient move, right? So that's an example of where lows were not broken and we have pullbacks. Let's go see here as well. Low not broken, pullbacks. It's just a slight look where this, because your stop loss, again, where's your stop loss going to go? Your stop loss is going to go above the high, and what will happen? You'll get stopped out. But once the low is broken, you get into a profitable position and can make a decision, of course, right? It's just that extra bit of confirmation when lows are broken here. Slight adaptation, and it makes a lot more sense and keeps you safe. Same thing with highs not being broken, can pull back first, right? It just helps you and keeps you a little bit safe. Even we will find sometimes that highs are broken, but it still reverses. But that's because we're at resistance, so it doesn't count. Doesn't count like that. So yeah, I hope that one makes sense for all you guys watching. Let's go have a look at one more trade and then we'll wrap this up. This is a very nice entry. I like this entry. This is a very cool entry. Comes back down, closes back in the range, clean candle, 5 minute, even has structure inside. Yeah, this is picture perfect. So yeah, very similar entry I've taken in the past here before, but yeah, perfect. So I hope you guys enjoyed this type of video. Definitely very informative. Definitely is good to go and review trades and give my opinion about it. A lot of good stuff I'm seeing in the exclusive and the free group as well. Just a bit of jumping the gun, which is normally normal, especially when price these days has been a bit jumping the gun. So I understand why people want to be more aggressive, and it has been working. But when it stops working, you're going to give that profits back. So, it's kind of like we can adapt, but at the same time, we want to always fall back on default, right? Always fall back on default way of trading and take it from there. So I hope you guys enjoyed this video. That being said, I appreciate you for watching. Leave a like and comment, all of that stuff. And with that being said, take care, trade sharp, and hopefully catch you guys very, very soon. Peace.